Good afternoon. Welcome everyone to our second video on multifamily, the magic of multifamily. If you missed last week's video, it is posted on our YouTube page. At the end of the presentation, you'll be able to scan the QR codes. You can follow us on social media, or if you go to YouTube, just look up New View Trust and you can follow us and you'll be able to see all of our workshops there. So I'm real excited about our guest speaker. His name is Steve Gessis with Smartland. And I'm going to go ahead and hand it over to him as soon as I go through some disclaimers real quick. A few things about NewView, who we are. We are a self-directed IRA custodian for alternative investments. I'll give you the best example. You have companies like Fidelity, Charles Schwab, Merrill Lynch. They limit their investors to the stock market. Our clients are able to invest in alternative assets like real estate, specifically what we're talking about right now, multifamily. They can do other things like private lending. They can buy single-family residences, short-term rentals, invest in any private entities. So if you have any questions, this is how the Q&A is going to work at the end of the video. I'll go ahead and jump back in, read the questions off. So if you registered and you through our landing page on our website, then you are going to, below the live stream video, there's a form in which you can submit your questions as the presentation is going. So go ahead and start submitting those questions whenever you're ready. There's also instructions to refer back to below, as well as on the landing page. So if you aren't sure, you can go back there to reference it. And then if you're watching live through our social media channels, you can comment in the chat to submit a question throughout the presentation. Feel free to submit them at any time, and then we're going to read those off at the end. All right. So what is a self-directed IRA? It really is exactly like it sounds. It gives you the ability to choose your investments yourself. You don't need to go through a financial advisor. It's not like picking and choosing stocks. You're investing in things that you already know. And it's really a marketing term when we call it self-directed. It gives you that opportunity to diversify your retirement portfolio and things that you're already familiar with. So if you're already investing in real estate, you just haven't done it in an IRA, there's a few things that are a little bit different, which we can always discuss one-on-one, but you're investing in what you know best. There's a tax savings that comes along with that. Your investments are going to grow tax-free or tax-deferred. Just depends what type of IRA vehicle you're using. And you're getting that diversification in your retirement portfolio. So these are some of the things I covered in the last workshop, which was a very brief overview of the different IRA plans. So if you want to get more detailed, you can rewatch that video, like I said, on our YouTube channel. But you have your personal plans like a traditional and a Roth IRA with contribution limits of $6,000 a year. You have your employer plans like a solo 401k plan. We call it a solo QRP here at NewView. You have your SEP IRA, your simple IRA. So these fall under the employer plans. And then you have specialty plans that can also be invested, like your education savings account. So that would be for your kids or grandkids, and your health savings account. Your HSA can also be invested into these alternative type of assets. All right, so these are the most common types of assets we do see our clients investing in. I went into more detail in the last workshop, but private entities is specifically where multifamily would fall under. And this series is all about the magic of multifamily. So whether it's structured as an LLC, a joint venture, a trust, that would fall under private entities. Probably 50% of our clients invest in these types of deals. Then you also have those real estate type of investments. If you're trying to buy, a single family residence, something that's going to be a short-term rental, maybe a duplex, something like that would fall under our real estate transactions. There's a few other things you can also invest in that people don't know. Offshore real estate's getting pretty common right now, especially with the way mortgage rates are. People are looking outside of the US for new investments. Tax liens, real estate options, condos, any of those things tend to be held in your IRA. You have your cryptocurrency as well, and you can do promissory notes. So whether it's a performing, non-performing note, secured or unsecured, you can also hold private notes in your self-directed IRA. So I am happy to introduce Stephen Gessis with Smartland. He is the Executive Vice President, and he's responsible for the strategic direction and performance of all teams with Smartland. As the Executive Vice President, Stephen is a catalyst for all the department directors, as well as ensuring that Smartland's vision and standards are being implemented. Stephen, how are you?
Hey, good afternoon. How are you?
I'm doing wonderful. We're excited for this hurricane about to hit us, but you know what? We're going to go ahead and get through that storm, and we'll be back next Wednesday. But for today, we have you here. You're in Cleveland, Ohio, joining us. and you're going to talk all about multifamily and why people should be looking at this asset class, correct?
Yeah, that's correct. And we'll be talking about it through the lens of even using your IRA. And so thank you for having me this afternoon. And thanks for the team at New View Trust for putting this together.
Yeah, we're real happy to have you. So I'm going to let you start sharing your screen. We'll jump right into it, and I'll join you at the end, okay?
All right, sounds good. Thank you. So, welcome everybody. Welcome this afternoon. And actually, I was really excited that I learned some small tidbits this afternoon myself. Did not know that you could use your HSA as well to do some of this alternative investing. And so, one of the things that I really caught that I think was quite great is that not only can you use your self-directed IRA to invest in things that you know about, but also perhaps that you may just be passionate about. So if you're passionate about real estate, as we are at Smartland, you could not only unlock the power of your IRA through the folks at New View Trust by using a self-directed IRA, and essentially, as was prescribed recently, it just gives you or lends you the capacity to unlock a little bit of equity. Maybe you're thinking about holding on to some cash, but using your IRA instead. So today we'll be talking about how we could do that, and we could use New View Trust as the custodian, and also learn about how that relates to multifamily real estate. And so thank you so much again this afternoon for having me. And so we're going to learn how to skip the crowdfunding platform and work directly with an owner operator such as ourselves, and kind of what that means and what those savings look like, and also kind of what kind of access that gives you. So again, Stephen Gessis with Smartland, and we welcome you this afternoon. So let's just make sure that my pointer is working, and I'm going to get it out of the way. So we were founded in 2008 out of Cleveland, Ohio. Now we're headquartered out of Miami, Florida. So I can relate to what some of the folks are talking about when it comes to storms, although we don't have as much of inclement weather throughout as it relates to like tornadoes or hurricanes. But what we do have is we have some snow on the way out of Cleveland, Ohio. But also being out of Miami, Florida, it gives us some insight on how beautiful it is in that sunshine state. And me and my family were actually headed to Orlando here shortly, and just came back from LA from a wonderful accredited investor event hosted by Veravest, a third-party accreditor servicer that we use. So getting back to me, founded in 2008, we help investors across the entire world build wealth, both internationally and domestically. Another unique tidbit learned earlier this afternoon is that you could use your self-directed for international real estate. Did not know that. And so that is unique and quite fascinating to learn today. So we're a fully vertically integrated company. That means that we not only do the investment management, the property management, the marketing, the design, the construction, but we are true experts and we are boots on the ground. We are what you would say a boutique private equity multifamily owner operator. And we primarily strategically operate throughout Ohio and Florida. We typically have opportunities that include a multi-diverse, multi-asset fund, as well as single asset direct deal investments. We manage a little bit over $95 million of capital that we've deployed to date, and our average returns tend to be over 20% classically, as you'll see on the screen on my right. And so past results, unfortunately, do not focus in on future results, but we certainly do try, and we work very very hard on that. So typically, we're delivering an outsized result as far as a 2x multiple on investments, and we'll learn a little bit more about that here shortly. So again, a unique value add proposition about us as Smartland, about what we do from a real estate multifamily owner operator standpoint, is that we have a proven track record. And that's really critical when you're thinking about who you're going to be working with, especially with access to various crowdfunding platforms. And that accessibility is really something that we'll talk about also a little bit further today, kind of some of those pros and cons. But mainly, I really want to focus on what it's like to have that hands-on direct experience, direct exposure to an operator. So we have done multitude of these multifamily projects, along with other real estate projects throughout our predictable spaces such as the Ohio and Florida marketplace. We have a disciplined operation, both from an underwriting, due diligence, acquisitions, hands-on, and management. That's a really critical piece to have a lot of those controls in-house to increase the efficiency. We're not talking about mitigating deficiencies. Let's talk about increasing efficiencies in buildings. So we look for value purchases where we can increase efficiencies and really hit the bottom line with bringing our streamlined DNA, Smartland DNA, to the property that we're acquiring. And we're vertically integrated, as I had mentioned on the forefront of this conversation. A little bit about us, and then further about us is this vertical integration. So this hands-on approach, being vertically integrated, gives us that interior knowledge, both from the investment side, the brokerage, the property management, the construction, maintenance, marketing, and design. And that holistic ecosystem really gives us the best opportunity to service our clients in a sense of this one-to-one peer partner relationship that you garner from an owner-operator versus a crowdfunding platform. And so I really like to share throughout the presentation, and maybe we'll have a few of these, but here's one to kick off with. So something that we do really well, as I mentioned, we're a owner-operator, multifamily value-add operator, and we work with accredited investors, both domestically and internationally, to help build wealth. And most of our clients not only work with us for a multitude of projects, but many of our clients, they elect to use a self-directed IRA to kind of unlock that equity or unlock that extra cash that's available to them. And they've been thinking about, or they're passionate about real estate. And as you can tell, I'm very passionate of it. And we are very passionate at Smartland about real estate. And so on your screen, you're going to see some of the things that we do. So we take the lowest market rent product, the value product that's older, kind of run down, needs some love, needs attention. And we're just looking to bring that product up to its market rent rate capacity, right? So we're writing pro formas to buy assets. For example, we're currently purchasing 251 units out of Akron, Ohio, but we can talk about that later, where we're going to modernize the property, bring it up to today's modern standards. And if you look on the screen, you'll see we'll take products with the old brown carpet, kind of that eggshell yellow, cream color walls that everybody's used to seeing in the apartments throughout this vintage 1960, 1970 era product, the old oak white appliance product cabinets, kitchens that you'll see, kind of that combination. And we'll modernize it, and we'll bring this new, brand new feeling, brand new piece of home, modern home with a technology first effort. And we'll talk about that too here momentarily. But I really want to highlight and focus on why we choose some of the materials that we choose. And so you'll see in your photo the old brown carpet, that not only does it have a wear down, it kind of can begin to smell sometimes over tenant to tenant. Not only that, but then tenant to tenant, it's kind of expensive. You got to wash it, you got to stretch it, you got to clean it. So what we do is we'll come in and we'll bring in a new modern luxury vinyl plank product flooring in, new trim work throughout, a new trim package, a new lighting package, and above all else, a new technology first package. And that will include various technology items such as digital locks, USBs, Alexas, Bluetooth speakers integrated in lights, and a multitude of other Wi-Fi connected devices. And so we really want to provide a valuable market rate rent product, beat out our competition while growing our own value from every acquisition that we do. And so we do this typically in a secondary or tertiary marketplace that we have some sort of foothold in. So when I said that we're boots on the ground, our staff is integrated not only into the process, but into the buildings themselves. And so here's another good example where we'll purchase something where on your screen, you'll see something that has that's a little bit older. It's had, it has a common area that we've now upgraded for tenant use and tenant life. And that's amazing. And then you'll see something down below where we'll do just an uplift, a small facelift on the landscaping, or about the, for the front of the building or in and around the exterior. And that all has to do with changing and modernizing the facilities that we purchase in order to increase rents, increase value, and deliver an outsized return to our investor partners. And as I mentioned, many of our partners are using their self-directed IRA, which comes with a multitude of additional benefits outside of the tax benefits that the self-directed IRA already comes with. You're also getting passive income, which your self-directed IRA can't take advantage of in this case. However, there is some deferral, and you will want to talk to your CPA about that. So topics for today. And so we've talked about some of them, but pros and cons of crowdfunding platforms, working direct with an owner operator. So the fees are a big thing. We want to talk about fees, and we want to be transparent about that. Having actual ownership where you're not just investing through a crowdfunding platform or into something or through somebody, where you have an actual direct ownership component of equity, the appreciation that your investment garners, and that there's no cap on your earnings, meaning that, working direct with an owner operator, many of times your earnings are not capped versus crowdfunding platforms where you may just get an expected return, but you don't have access to the rest of it. And so let's get to it today. Let's go. So some of the pros of crowdfunding platforms, I think there are some very positive things that we need to highlight. So it's not just about, it's just weighing the decision about what it's like, the convenience of working direct with an owner operator, or thinking about a crowdfunding platform where you're not quite intimate with who your true ownership group looks like, and you're not a direct partner per se. So there are some, and then you didn't really do all the due diligence yourself. But let's talk about the pros. So it's a great way to test the market for a little bit of dollars if you haven't tried it. A lot of platforms have very low minimums, so sometimes it could be a good opportunity. We primarily work with accredited investors. So in some cases, some crowdfunding platforms are opening up to non-accredited investors. However, also there are some additional challenges and boundaries that you may engage in or see or experience, I should say, when dealing or trying to use your self-directed IRA. So some of the magic of multifamily also happens through this self-directed IRA. And so it's a little bit more difficult to get through that hurdle with a crowdfunding platform. But nevertheless, still a pro. Smaller investment minimums, getting back to that and highlighting that. So sometimes you'll have a much smaller one, maybe $100 or $500, just to kind of try out, get used to it, learn the waters, see what's going on. You do get some diversification, geographical expansion. So you can get that with a crowdfunding platform. Some owner operators, such as ourselves, also offer that. So I mentioned we operate throughout Ohio and Florida. So kind of with us, you're getting a little bit of that hybrid. So if you see, there's going to be a little bit of cross-pollination on the goods and the cons. So the pros and the cons, or the goods and the bads, right? And so it's interesting if you take the time and think about it, doing your due diligence and finding a good jockey that you could really rely on, such as, and going direct with an owner operator. I think you'll see that will outpace even some of the pros that the crowdfunding does offer up. And so again, the multiple investment opportunities, the diversification, the small investments, the greater testing market. So I think if we sum it up, those are the key 4 items that I'd like to share as far as what we think is the pros of crowdfunding platforms. So I think a lot of folks do like to hear about the con side, and I like to weigh we like to weigh our options. Something that we really hang our hat on here is that our level of discipline here at Smartland. I think that's a really critical item. And what I mean by that is that, and why I said that is because it's really understanding and evaluating a deal, right? Looking at the pros and cons of every deal. And although it's the negative side of things, we have to be negative minded and look at what the downside risks looks like, what the downside protection looks like, what the downturn analysis looks like, right? So those are all cons that we would talk about even in investing in a multifamily investment, whether you're using your cash or your self-directed IRA. Doesn't matter. We need to look at both sides, the pros, and weigh the negatives. And so when we're looking at the cons of the crowdfunding platforms, some things that come to mind are going to be things like the platform endorsement. It's like, who did the research, who did the due diligence, what's that like? Are you ready and prepared to put your paralysis analysis to test and let somebody completely else handle it and kind of do it all over again into multiple markets and different markets? So, are you really getting an expert, or are you getting a generalist when it comes to crowdfunding? And I think that's a really good thing to just kind of pause on and think about that from a holistic kind of ecosystem statement. Is right. Like, a crowdfunding platform is kind of a generalist, right? They can give you a bunch of stuff, a little bit of this, a little bit of that, a little bit of here, a little bit of there, but you can't really get to the depths, right? As you can with working with an owner operator. Yeah, it's going to be a little bit more work to get an owner operator out of maybe all the markets you want, but you can shorten the distance with a company like Smartland, where, we cover already two. We cover Ohio and Florida. Maybe you want to be with somebody also out of LA. So now you have two owner operators. So rather than and then here's the main difference is that, that direct access, but you're also getting the specialist, right? You're getting a specialist that's focusing their time, effort in a specific area, plan, or place, and in a very specific tertiary, secondary submarket where they actually have a pulse, boots on the ground, a feeling for what's going on, have done their due diligence, spend their time and effort in those particular markets, versus the crowdfunding platform. So yeah, you're getting their endorsement, but really, they're just generalists, right? It's like, we hope that the general information that we're using is going to be a fit, and if the shoe fits, and if it fits everybody, hopefully it will fit here. So you are getting that risk. I think that larger risk component is just in this particular just in this space that we're talking about. So it's an oversaturated market. There's a lot of crowdfunding platforms, so you do kind of have to funnel through who it is and who you don't and who you want. And so there are some really good ways to kind of figure that out with the owner operator. I mentioned I just came back from LA. Veravest is the platform that we're with. They're a third-party accredited investor verifier, as well as fund administrator in some cases. So they put their good housekeeping seal of approval. They've done their due diligence on us. They've done their due diligence on our deals. And furthermore, we're talking here on NewView. So that means something already from a credibility standpoint. But regardless, I don't think that's really where I was going. And I might be slightly digressing here, is because really, you're just talking about, again, oversaturated markets. So people are competing for what they think may be the best operator when it comes to, bringing in onto crowdfunding platforms. So it gets complicated. At the end of the day, it's all about who you really trust from an owner operator standpoint as your jockey to get to that successful goal line for building that wealth, whether it's using, again, cash, equity, or your self-directed IRA through NewView Trust. And so there's, these are some of the questions that I think people have to ask themselves. And so the lack of transparency, where, talking about who the actors are and the sponsors, and really getting to the nitty gritty and getting access to those questions. So I think there's that component of it. And then the fees. A lot of times, these places are riddled with fees, and a lot of their money is based on the fees, and their income and revenue is based on fees and other fees. So working directly with an owner operator, again, you can kind of sift through a lot of that stuff, eliminate a lot of these fees, and kind of get direct access. And by eliminating some of the fees, you're getting to the end goal faster of achieving that higher net return on your investment, achieving those return investment goals, achieving that wealth building strategy, achieving that appreciation schedule. So, there are a lot of enhancements that you get with working direct with an owner operator versus the crowdfunding platform. And so when we're talking about fees, we can talk about that. Here's a really good sample of a fee schedule for a deal that we're doing now. Again, as I mentioned, we're buying a 251 unit multifamily out of Akron, or some of our clients are electing to use their self-directed IRA as their choice of equity or their choice of vehicle to invest with, or invest through, or hold their asset in. There's a lot of various ways that I think you can kind of speak or use that term when it comes to using or utilizing your self-directed IRA. And I guess it's just a personal preference based on your personal activity. But getting back to the fees, there's transactional fees, right? And so if we take a small snapshot, which we tried to provide in this chart from market versus Smartland, owner operator working direct with an owner operator versus working with a platform, you'll see right away administration fees are lower, acquisition fees are lower, debt placement fees, refinancing fees, loan guarantee fees, syndication appraisal fees, disposition fees. I mean, it just goes on and on and on and on and on, right? To the tune of that the market allows for up to 20% in fees on the just transactional side on the front end of a transaction. So, we try to be forward first when it comes to investors. So we're technology first when it comes to our product, and we're investor focused when it comes to the capital, right? And so the important two components here that we really use as our key pillars, and our guiding light for our process is going to be forward thinking about how do we get to the goal for building the wealth, capturing that goal for our investors, and that has to do with just be fair. So you'll see our transactional fee is just a small fraction in comparison to the market. And then there's annual recurring fees, and the same thing goes for that. It's fractional in comparison to the rest of the market because we want to build a long-term partnership with our investor partners because we are partners in the deal, and there's so much to discuss about that. And so what does this mean? So I mentioned that we're partners, and that means that you're an actual owner. You're an actual owner of an asset. So it's not like you're buying stock at Microsoft and you are, you're a stock holder or a certificate holder. No, you're a physical participating equity investor. You are a participating as a limited partner, meaning that not subject to debt liability. So us as the owner operator, we take this on. We have the full liability on this. You have the actual legal equity ownership. So you actually own the asset. You can hug it, feel it, touch it, visit us, tour it with us, check it out. You get all of the financial reporting. You get all of the status reporting on the renovation modernizations that we do. So when we buy something, we're buying, as I said, the lowest value rent product in the market with the intent to do a heavy modernization, like I showed you early on, some of those photos, and bring the rent to market rent, not necessarily above the market rent. We're just bringing it up to the market rent, not above the market rent. And really, it's up to you to decide what you're participating and up to what level you're going to be ready to participate with. So you have to decide, this is your opportunity to really transition from being a saver to an investor. So this is an opportunity to really highlight your capacity to be a real multifamily investor. So if this is something that you do, you like, you're retired, maybe you want to do this from a passive way, we provide that vehicle for you. If you're learning about it and you're adding alternative investments to your portfolio, this is a way to do it with us, Smartland owner operator. And so we have a segment of both sides of clients that have been in the business, may have had some single family rentals, may have had some multifamily rentals, retired now. They don't want to deal with the management, the other components that come with it. And so they invest in us. They look to us for passive investments. And a lot of times they're using their self-directed IRAs to do it. Doctors, attorneys, professionals, many finance professionals that use our services for passive income wealth growth. And this is, one of the things I think that Warren Buffett said it, that you have to, you're going to die working if you don't figure out how to make your money work for you while sleeping. I may have butchered the quote, but I know it's in line with that. But it's true. And so you do have to have a vehicle that is working for you while you're sleeping and empowering yourself with using your self-directed IRA with the folks at New View Trust to invest into a multifamily asset or into a multifamily fund direct with an owner operator gives you this direct exposure and gives you the diversification for your portfolio to balance it off. And so Smartland is participating as a general partner. That's who we are. We always participate in all of our deals as a general partner. And then there's an opportunity for a multi-generational income. And that's really important because a lot of times what the main difference here is that once you're working with an owner operator, many of our direct investment deals into our direct multifamily investment vehicles allows you to stay on indefinitely with us if we refinance, where you get all your principal back plus all the earnings accrued, all these wonderful gestures occur, but plus you get an indefinite position. So this is unique, and this is very unique. And so when we're weighing, using a crowdfunding platform or working direct with an owner operator, this is another massive, massive difference that you can capture. You're working direct with an owner operator because this is not something that the platforms offer. It's just not there. It doesn't exist. So it is unique to this. And so I want to we'll sign off with that today. And I do want to, again, take some time, answer some questions, see if, our audience has any particular things they'd like to discuss. But for the most part, that's what we have today. Oh.
All right, we're good. Can you hear me?
Yeah.
All right. That was amazing. So much good information there. We've got lots of questions that were coming in throughout the presentation. So I'm going to go ahead and get started with the Q&A. Let's see. First question here. Can you provide an example of an indefinite partnership?
Yes, I can. So we purchased a 112 unit tower approximately 3 years ago. We took that tower, we modernized it. So it was one of these, where we purchased a value rent product in the market. We modernized it, some of the photos that I showed earlier on. Then we went ahead, and the strategy was that we were going to hold it between 3 to 5 years and then either sell it or refinance it. And so we ended up modernizing it and what we call bring it to stable condition. And so once we got it to stable condition in under 3 years, we refinanced that deal. We returned all of the principal capital to the investors. We returned all of the accrued interest to the investors. And then they got a 20% equity portion indefinitely after we had refinanced it. So meaning that you'll receive a portion indefinitely in completely, valued towards your investment initially. So we leave 20% in equity of the deal for our investor partners indefinitely. And in some cases, it can be as high as 50%. So yes, this is certainly a great question. Thank you.
All right. Yeah, that was a good question. Okay, next one I got. How can you accelerate depreciation?
Awesome. Yes. So actually we did not talk too much about depreciation within the webinar, but to discuss that a little bit further. So a lot of times what we'll do is we'll define our cost segregation strategy either on the through the project or on the front end of the project. And what that means is that what we'll do is we'll hire a special firm that conducts a cost segregation study, an engineered study of the property. They take apart the property into its various components, and then certain components are subject and are eligible to be accelerated, meaning so you get a larger portion of the depreciation distribution. And since we have a K1 partnership, a 1065 partnership, you would be eligible as the investor to get your fair portion of the partnership depreciation, loss, or gain, right? And so you're getting this equal distribution. And so, yes, we do an accelerated bonus depreciation. And so sometimes it's done right at year one. And in other cases, it might be post the refinance. It just kind of depends. It's a project driven consideration.
All right. Awesome. All right, everyone, keep those questions coming in. I got another one that popped in here. I think you kind of touched base on this already, but what are the differences in fees between crowdfunding platforms and working with a direct owner operator?
Yeah. So there's going to be actually a lot of fees, not only from a acquisition, but also the fees that. So a lot of times, what you don't know about on the crowdfunding platform is that they have a side letter agreement with the owner operator. So the owner operator actually may be paying them more of a internal rate of return than is being advertised, particularly. So you may be losing 1, 2, 3% at the gate at the cash register before you even know. And that's not even the fees that we're talking about that are recurring or administrative or, as I said, ongoing, recurring, administrative, or acquisition fees. So there are more than just the fees that I highlighted on that schedule. It's actually fees that can be cutting you short of some of the returns that the asset may be eligible and performing to.
All right, perfect. So let's see what else we got here. If there's any other questions that came in, I'm gonna just check the social media. All right, I don't see any other questions for now, but Stephen, I mean, with the marketplace the way it is, I have a few of my own questions here. What are your predictions for 2023? Where do you see some trends happening in the multifamily world?
So, also, yes, great. We have a lot of folks asking this very similar vein of interest of questions. And so, number one, multifamily, the rents have been climbing year over year. So I think that we are seeing a height on rents.
Mhm.
Being a value add operator for us, it's just kind of meeting the market. So since we're a low value rent buyer, for us, it's just going to market with that. And so from our seat, it looks great because we're a multifamily operator that makes our own market. And what I mean by that, we're a middle market player where our modernizations allow for class A folks. Maybe they're losing, maybe they were in a higher role job and maybe they've been demoted or they've gone down to a different role. So they can downsize to us without having to lose the amenities or the modernizations. So from our seat, we're pretty consistent plateau from a class A seat. I think it's getting a little volatile. Market rents are very high. Inflation's very high. Interest rates are, from a deal perspective, deal flow perspective into 23, we're still very bullish in the sense of, we just stay disciplined and we don't really look to the noise, whether it's higher interest rates or, we follow cap rates and NOIs, and we can only pay to pay what we can pay. Just stay that disciplined approach for a door cost basis. However, from a market standpoint on other situations such as deal flow, like are deals going to be falling out of the sky because interest rates are high? Certainly some folks are going to be caught in this fire. There's no doubt. However, we do have to consider that historically, again, we've been looking at operators beating pro formas year over year on market rates. So even if they are forced to currently, to readjust or get new debt, even at the higher rates, it still may be affordable for them just to kind of weather the storm. I think it's still unknown kind of what the canary in the coal mine is. Is it going to be an automotive or is it going to be maybe it's going to be industrial warehouse? We're seeing a lot of industrial warehouse that's kind of taking a little bit of a pause from coming new online. And so I think that there's a variety of critical questions. And obviously SFR, single family residential, is seeing a lot of headwinds from a cost price per door across the country. We're getting reductions in values going kind of pretty lockstep across the country everywhere. But we're looking for this softening. And so what we know for sure, being a owner operator of rental property, is that our sites, we were birthed out of 2008, so that was one of the toughest times.
Yeah.
And so our sites maintain pretty crystal clear on rental being a high demand product. Folks need to live no matter what, and for sure this downward pressure between prices of property and market rate rents and inflation and interest rates continue to put downward pressure on renters to stay renters. And so from our, again, from our seat, in the near future, we think that renters are going to be still a strong marketplace for us. But we're infusing additional technology focused items, whether it's the providing internet directly to our residents or providing furnished units. So we are trying to lighten the load from what it costs to move into new units. And so we're trying to be cognizant of that as the market evolves.
Okay. So I was at a multifamily conference this past weekend, and a lot of discussion was around changing some strategies because some states are debating on putting some rent caps in that market. How would this change your, strategy for Smartland?
So Ohio hasn't seen any rent cap real discussions about that. So for us, again, we're a middle market maker. So rent caps, I think are going to be more aggressive towards that class A, and then obviously affordable has kind of become a loose term, and so even affordable seems somewhat unaffordable. So even at the political level, when we're talking about affordable housing, there's still a little bit of delta there between even market rate and what affordable means in every single sector. Affordable in Cleveland may mean 900, affordable in Miami may mean 14 or 1500. So it is tiered and it is specific to various cities. So I would not glean too deep on that. I wouldn't put the microscope too far in on that yet. That lens is still developing. And so, and again, I think it's really clear and I think critical to really think about that it's market consistent. Would we change our strategy based on that headwind? Not in our markets, not yet. No, we don't really see that. And even that, I think even with those things, a lot of times, I think it's still in its infancy as it's developing, even that rent cap concept. So even if you talk to folks out of New York, they're circumventing, seeking, looking. I don't like to use those words and terms, but that's what they do there, right? So they're capitalist society. They're focused in on figuring out how to make it work. And so yes, so they're it's definitely a controversial topic, no doubt about it.
Yeah, it definitely is. All right, we had one more question pop in. We'll go ahead and read this one. What are the dividend earnings paid to the limited partners quarterly, monthly, or annually?
Yes. So most of our funds are and direct investments are focused on paying out on quarterly distributions. In some cases, we even have monthly distributions.
All right, perfect. All right, Stephen, thank you again so much for taking time out of your day to, talk to our prospects and our viewers. I know they're going to really enjoy this content. Remember, we're going to post this and it will live on our social media. So share it with your friends and family. You can scan this QR code now. Make sure you register for our next class every Wednesday, 1 p.m. We've got a whole series of multifamily this month. And then we're going to bring Stephen and some of the other speakers back for a panel discussion. You don't want to miss that. Stephen, any last thing you want to leave for anyone before we go?
No, come visit us at smartland.com, and we're ready to help you use your New View Trust IRA to invest and build your wealth in multifamily with us here at Smartland. Thank you so much for spending your afternoon with us.
Thanks a lot. And Stephen's contact information is right there at the bottom of the screen. If you want to reach out to him, go ahead and reach out. When you're ready to get that IRA moving, you reach out to myself and my team. We'll get those documents and your accounts open, funded, and out to Smartland. All right. Thanks, everyone. Have a wonderful rest of your day.